What up, everybody? Welcome to another class full of gems here at SMC. So, y'all know, first part of class, we talk about all the gems we could pull out of last week from price action last week, and then once again, after that, we jump into the predictions on what's going to happen in this upcoming week of price action. And we got an eventful week, it's CPI week, and the market is looking very scary for a lot of people. A lot of people are starting to wake up to the bearishness, even though y'all know we've been talking about bearishness before it was bearish. So we've been really ahead of the curve here at BTSMC, but a lot of people are just now joining the wave. So we're going to see how they could potentially manipulate price action and get people out of their bearishness before they go back to the downside. Or maybe there's going to be a reversal. I'm going to tell you my thoughts later on. First, let's talk about last week. So first of all, when you come to the chart, this is what you see. And why am I here on the weekly? Because me personally, when I come to a chart, I go to the monthly and the weekly. The monthly didn't really tell me too much because this is what it looked like at the time, right? It's not really saying all that much, but the weekly told me a lot. So when I look at the weekly, what I notice is here on NASDAQ, if you guys remember, many weeks ago, I told you, hey, if we're gonna have a bear market, it might start like it did in 2022, where fails to run, NASDAQ fails to run the previous all-time high. It has a very strong run up into it, and it falls just short, while the S&P 500 in the same looking chart actually did this instead. Ran all-time highs, then comes down. So NASDAQ falls short. The S&P runs the highs and comes down. That's what we call the SMT divergence. So that's something we were looking for. And so we got that divergence, just like we had said. And then we get price coming down pretty hard. And usually when there's a divergence at a key level, that's where you expect big moves to happen in the market. So seeing that on a weekly chart like this, I'm not necessarily anticipating this to be a sweep of these internal lows right here. I'm not necessarily anticipating just to see price sweep this and come up. It's not exactly what I'm anticipating. Of course, it could happen, but I'm not really expecting that. What I'm actually expecting to see is us potentially create a bearish fair value gap on the weekly, where I'm gonna be able to create this once I get the third candle, because you need 3 candles for it, right? But I'm anticipating this happening. Therefore, what do I need for that? I need this upcoming week to be a red candle. So what I'm telling you right now is when I looked at the chart and it looked just like this, because this is on replay, right? There's another candle that came after this. When it looked just like this, I was thinking, okay, I think this week is gonna be a red week. So I'm looking for the beginning of the week to probably manipulate us to the upside a little bit, and then we're gonna come down and we're gonna take these weekly lows and continue lower. What am I aiming for? I wanted to see price, like I told y'all on Friday, I was looking for that 818, but a minor target also would have been these lows right here at 20,013. But either way, obviously I'm looking for bearishness. So I think when I looked at the weekly, what I said is, all right, I'm expecting a downward direction. I know there's going to be setups under previous week lows. Where will we take it? If we run previous week lows, I'm looking at these lows and I'm looking at these lows. Got that from the weekly. Bet. Let's go to the daily. All right, now I'm on the daily here, and this is what I seen last week. I'm like, interesting. Okay, so let's look at a couple things here. All right, so who remembers when we were in this crazy 50,000 year consolidation on the NASDAQ? And I'm like, yo, when are we going to break this? I don't know. But what I do know is when we break consolidation, as I always tell you guys, I like to break it with fair value gaps. And if we're going to break consolidation with fair value gaps, they need to be respected, you know? And when you had this fair value gap right here and price opened up with this green candle, let me circle it so we're on the same page. Y'all see that green candle? After that day, we had a watch list just like this. We had a class just like this. And in that class, I said, yo, everybody, if NASDAQ doesn't run all-time highs right away, I think we're going to come crashing to the downside. I said one thing we could check for is the upper half of this blue area, but that's it. Only the upper half of that blue area, that's it. And I need bodies, I need daily bodies to hold it. But to be honest, we shouldn't even be touching that blue area in the first place. Remember that? Y'all remember that? Who been here? Who been here? Okay. So once y'all seen what happened, obviously when we came back to this area, it didn't last long, right? We plummeted right through it and we started this downtrend, and the market has officially corrected by definition. We're looking to see now, is it going to be a bear market? A bear market is when we drop 20% from the recent all-time highs. A correction is just 10%. Okay. So now we called out a correction for sure, but now we want to see if we calling out a bear market ahead of time. We'll see what happens going forward. And somebody said, oh, thank you, Anjali, for answering that. Yep. All right, cool. So What was I gonna say? And it had nothing to do with the dojis, by the way. I don't do candlestick patterns or stuff like that. It has nothing to do with dojis. Like nothing I'm talking about has to do with dojis. There's so many dojis that don't cause like trend shifts. Like I don't want to use confirmation bias. Like I know a doji started. There was a doji right here, but why wouldn't we validate the doji right here? There's a red doji. There's a green doji. There's another red doji right here. None of these cause any type of reversals in the market and nothing like that, right? So I don't want to just only like what. So what? When I see this one, I'm supposed to expect a reversal after the last like 15 failed. So that's my point. I don't really. That's me. That doesn't mean that there's not a bunch of fire traders that incorporate that into their analysis. I'm just telling you mine and reasons why that's not a part of my strategy and then like that. So I have my reasons why I expected the big drop. You know, I've been calling out the rejection since last July. Anybody who been locked in me for a minute knows that you know, since last July I've been talking about price dropping at the 611.85 level, and as soon as we got there, you've seen what's been happening here on spot. So been looking for this for a long time. I said this 7 months ago that we were gonna reject 611.85, and then you see what happened. So I'm already at this point in time when I see what was going on here, already anticipating price coming down, but I needed to see this blue area getting validated. Now, why am I bringing that up? That's important because what I'm speaking to you guys about is how we tend to leave a consolidation in the market. How do we leave a consolidation in the market? You want to see fair value gaps get respected on the breakout. So that's the upside. It didn't get respected. You've seen what happened. Will we respect the fair value gaps as we try to leave the downside now? We trying to leave to the downside. Will we respect those? So here's the lows of it, the yellow line, that's the lows. We didn't have a fair value gap under here. So what I got to do, I got to look at the one closest to it, which is this. And so that's why, as I told you guys last week before the week started, I was looking to see if price could reject this area. I would like to see bodies respect 50%. Okay, I would like to see bodies respect 50% of it if we reject it. And you can see that bodies came slightly above 50% on this chart. I believe on the other chart, they respected it 50%. Let me see. Just want to check real quick. I could be wrong, but let me see. Yeah, okay, it came slightly above here as well. But either way, it doesn't really matter. Like that's just a signature. As long as we're respecting the fair value gap, we good. So let's go ahead and check out. Let's go ahead and check out like how we could trade that now. So once again, heading into the week, just to recap, you guys, don't worry about these yellow lines. By the way, we're gonna talk about all of those. My charts are never busy. I don't like busy charts. I'm gonna talk about everything on here during my demonstration. I'm just letting you guys know I'm anticipating a red weekly candle. I need to make sure we're on the same page. Anticipating a red weekly candle. That means that when I come to the daily, I'm looking to see a bearish fair value gap, most likely take us back to the downside on the daily. So when I have this drawn out, I'm very interested on seeing daily bodies respect this blue area. Key word here is daily. So when I see daily bodies, I don't care if the hourly closes above it. I don't care about that. If the hourly closes above it, but by the end of the day, we close back here, I'm good. Okay, I'm good. So that's something that I'm looking for right there. Hold up, I think there's something. You said man closing the interval. All right, whatever. My bad. I thought I messed with some of my settings. But all right, so here we go. We got that. I'm gonna delete the blue. You guys know we're looking for bodies respected. You already saw that bodies respected it. Now let's go to the hourly and see how we could have potentially traded this little section here. All right, which I did trade this. I traded this live with the team. But so I also told the team, I say, yo, everybody, I'm only bullish on the NASDAQ if we could actually come back to this fair value gap. So you see this red fair value gap right here on the hourly chart. I knew if we touched that, we was bullish because to me, this gap should be left open. And I think people forget that fair value gaps are gaps. The most key word in a fair value gap is the word gap, because gaps get filled. Gaps also get rejected on, but people forget the fact that gaps get filled when we talk about fair value gaps. And so my point is this: if we were to come back to this bearish, quote unquote, fair value gap, we were going to fill it out and continue higher. So I did not want price there. So that's why I had everybody saying, yo, I'm bearish as long as we stay below that fair value gap, literally. All right, so anywhere in here, I'm looking for bearish setups. So now let's come to, I'm getting closer to the times where we actually trade. Can I see? All right, so okay, look, let me show y'all something. So as long as y'all know we looking for anything bearish in this area, then you on the same page as me. Now when I look at the 15-minute, and I hope you guys realize what I'm doing is helping you guys know how to approach the market before the market opens, having a plan heading into it, knowing areas you want to see respected, areas you don't want to see price go to, and having PD arrays that you want to see price use to get there. So far I showed you the weekly direction. I showed you the daily PD array, daily bearish fair value gap. The daily is supposed to send me down to my weekly targets. Cool. So now I'm coming down to the 15-minute and telling y'all like, okay, what else can we do? So on the 15 here, you can see how on the 15, they have a bullish fair value gap right here. And it's very suspect how it's being used. You see this bullish fair value gap? Look how it's being used. Very suspect. Like, why are we consolidating on it like this? Price don't really want to use it. It's very weird. Now, but it's cool. You know what? Let's make sure price invalidates it before we go short. There's nothing wrong with that. Because my thing is, if we were to invalidate this and come back into this consolidation, that's a terrible sign. I'm aiming for the lows of this consolidation. I think price gonna really die off under that. So what did I tell y'all about how we leave consolidations? What do we, let me make sure you're on the same page. What do we want to leave consolidations with? Can I make sure we paying attention, please? I got one answer in the chat so far. That's telling me y'all sleep today. I don't know what's up. Okay, so they coming in now. Yeah, fair value gaps specifically. PD array, fair value gaps. I want to stick to that one because I wouldn't just take any PD array. Depends. It has to be a fair value gap, preferably. All right, exactly. So, but shout out everybody in the chat that's responding. Exactly. See, I know we want to leave it fair value gap. Guess what? You got one, but don't forget we got to still respect it. So once again, to me, I'm bullish if we make new highs off of that and continue. But if we come under this, it's over with because I know we're gonna come to the lows of that consolidation most likely. I don't see anything that could stop it in here. I'm not worried about this little fair value gap. That's one of those that's going to become a gap and get filled. Facts. You got the equal lows here. That's a beautiful liquidity target. They're also London lows. It's a beautiful pool of liquidity we could take. And then, so something I told my mentees before the market opened on Sunday, which is up here. The market opened on Sunday. Something I told them was, hey, everybody, y'all see this? I'm going to go to the 5-minute. It's more apparent there. I say, yo, everybody, y'all see this bullish fair value gap here on a 5-minute right here? I said, if NASDAQ loses that, we're going to run the weekly lows, which is all the way down here. So I said, the minute we lose this blue, the NASDAQ is dead. It's over. It's over. It's dead. Okay. So you see early Sunday, we trade back down, fill in the opening gap, fill in the new week opening gap, trade down into that very same fair value gap, and it works out. It actually works out. So, hey, no need to be ultra bearish, but you have a feeling things will turn over. But my point is, now that you see us about to maybe invalidate this 15-minute fair value gap, and I already told you under that, I got price coming all under here through London lows. Under London is what? This same blue area. But we already used this blue area, so why would we use it again in this context? On top of that, the daily and the weekly already told us we're supposed to be bearish. So all of a sudden, you looking at a major move because, hold on, dang, oh yeah, no, I'm visualizing the whole week up here. That's a mic drop in itself. I don't really think I feel like y'all missing it. And it's frustrating because I want y'all to get it so bad. But do y'all realize how just from that little section and everything I outlined so far, you really see the whole week happening? So when I say things like, yo, we call it before it happens here, and y'all watch day after day how I'm saying what the market is going to do before it ever does it, long before it does it, that's because I'm visualizing the whole thing. It's like putting pieces in my head, but there's reasonings behind what I'm saying. I'm not just talking for fun and getting lucky every day. Like, really think about it. So, but I feel like some of y'all missed the details. It doesn't hurt to hear it one more time. So I'm gonna recap it very quickly, as quickly as I can, just because I don't want nobody left behind. So Pete, let me go back to this. Pete, let's recap this really quick. Make sure everybody on the same page. Look. I got you right now. So you get to the chart. I need the other one. Hold on. There we go. Let's go here. Boom. It really starts from last July 7th, 2024, when I said the market is going to reject right where it rejected at. It starts there, but whatever. Even past that, cool. You're expecting a big downtrend in this exact spot. Copy. You're starting to see confirmations. Things look good. You don't think this is just going to be a sweep to go higher, meaning you don't think that we're going to go right here like that. You're not really expecting that. You're expecting a continuation to these lower targets down here, especially 19,818. You're expecting that. All right, so that means that this week I'm expecting the heart of the week to be a big sell-off. I'm expecting red this week. Copy. All right. So if I'm expecting red this week, that means anything bullish should occur on Monday. All right. So when I go to the daily here, I'm like, all right, what do I have? I have a daily bearish fair value gap. After that, it's nothing really that I like sending price back to the downside. Nah, because if I'm gonna leave this consolidation, it needs to use this fair value gap. It's not supposed to use this one. No. That's not good. If we're gonna leave this consolidation, it needs to use this fair value gap to go lower. So already I have the spot where we're gonna reject that off the rip. All right, bet. So that's good. Now when we come down to let's go to this time frame. Let's go to the hourly here. Now this is intraday. Now this is like Monday morning, kind of Monday morning. Like, all right, we still below the area where, like, remember I already told you guys I don't want this fair value to get touched. So I already have the area. I'm watching for all rejections up in here. Anything here that's bearish, I believe in it. All right, so I just focus the heck out of my chart to this little bitty area. Now intraday, I wake up, I'm like, okay, what's going on? Oh, we consolidating in this very suspect looking 15-minute bullish fair value gap. All right, well, one thing I know is if we could run the lows of this consolidation, which is taking us outside of this fair value gap, remember that's a bullish one, quote unquote, but we about to fail it. It's about to fail. So we fail this fair value gap, we start coming down here. Oh, well, I mean, ain't nothing stopping it from getting down to London. And if we run London, we coming back to this blue area. And I already told my mentees, if we lose the blue area, we running last week's lows. Why do I think we're gonna lose the blue area? We already used it to create a new high. Coming back to it is suspect, super suspect. Most likely not gonna use it again. So the fact that we coming back to the blue area in the first place is already like, oh yeah, I already know we're gonna trade through it. Man, if we trade through it, oh, we going to last week's lows. If we trade through last week's lows, now all of a sudden my downside target's starting to look real good. You know, all the downside targets I have starting to look real good. But yeah, at least everything was determined up in here. All right. So can I get ones in the chat if you follow me? Twos if you not, if it went over your head a little bit. Again, a lot of ones so far. Got a two, okay. Got a bunch of ones. Got a couple twos. It's majority ones, so I'm gonna ride with that. Twos, don't even worry, because when this gets posted, just rewatch this part of the class. I do want you to understand it, but I appreciate y'all honesty though. But I see like high majority ones, so that makes me feel like, okay, I can move on to the next point. But definitely want y'all to watch on replay because I want y'all to understand this because it's very crucial information that could be used. See, I've seen how we traded past. Right now, what we're doing is I'm telling you guys how you could have seen last week's sell-off coming before it even happened, and I'm telling you guys why I was talking about it before it even happened. Why I seen this whole thing, and I'm showing you guys my whole rationale. This is stuff that goes in my brain. And I'm also helping you guys set up like your pre-market analysis, like things you should be looking at in the pre-market. And that's what's up. I think be careful with who you're taking fair value gap information from, because as a person who's mastered fair value gaps, I really know that there's a lot of misinformation of fair value gaps online. So please just be careful. People don't know it like they think they do, but please be careful. I think it's very apparent here that I understand fair value gaps because I tell you guys, think about just everything I call out on a daily basis. It always plays out. I'm not gonna say always because nobody's perfect, but high majority of the time it plays out, and I don't say things in hindsight. Everybody teaches this stuff in hindsight. Like, hey guys, do you guys notice that price used this fair value gap yesterday? Like, no, I'm telling you today, yo, everybody look at this fair value gap tomorrow and watch how price uses it tomorrow, and y'all watch it play out. So like, that's something that can help you separate who knows what they're talking about, is if they could call it out ahead of time. And that's something I've been specializing in for well over a year, week after week. So I just say be careful with who you learning from online, because online people be annoying me with the misinformation, and people come to my one-on-one saying all types of stuff. I'll be like, bro, y'all killing me, man. Where y'all learned that from? It's a lot of unlearning that gotta go on. So the market, it opens. This is a 930 candle. They said they don't do it like BTSMC. That's all facts, bro. Um, yeah, I hope so, Brent. I hope you can tap in with us. So, yeah, the market opens up. Y'all know 930 had them crazy candles that does that. Now let's get into what happens after. So remember, these are consolidation highs. What do we say we like to see? If we're gonna lose a consolidation, we want to lose it with a what? What a fair value gap indubitably. So I'm not mad at you watching this bullish one right here. In my opinion, you should watch the upper half of this. See if the upper half could take you higher. Maybe you're saying, yo, I don't care what Rel said. I think we going up this week. That's a fact. So we're gonna lose the consolidation highs. Let's use this to do that. Let's use that to do that. Let's see how that play out. Ah man, that's not a good sign. It's not a good sign, y'all. Let's peek in. Let's dive into the 15-second chart right quick. Let's dive into the 15-second chart. So what is this? I don't know. I'm about to delete that blue area. We don't need that no more. Oh, that was a 15-minute bit, so we don't need it no more. All right, on the 15-second chart, what you would notice is we left the consolidation with a 15-second fair value gap. But what you got to ask yourself is, hey, did it get respected? So this is a time frame I typically enter on, and I don't use it in every single area. You got to know when to use a 15-second chart. I think a lot of people started talking about the 15-second chart. I noticed that after I became very vocal about me using it, and I noticed that people just be using it any and everywhere. Like I don't use it just any and everywhere. I use it in very specific spots. This would be a place where I would use it as we try to leave a consolidation, and you see how the fair value gap didn't hold. So that's signs to me that like I would stay cautious on upside after seeing this. Now what does price do? Price uses the bearish fair value gap instead. You see? Look how I switched it. I'm not highlighting the green one, I'm highlighting the red one. It used the bearish fair value gap instead. Is price not talking to you? Because it ignored the bullish one, but it respected the bearish one, and then guess what it did? It created another one. That right there is bearish sentiment. Not just creating one, but using it, and shortly after making another one. Boom, tapped in. We keep dropping. This is all great signs. This is also in a premium of, I know I'm going over certain people's heads when I say this, but this is a premium of this price leg on a 15-second chart. So we drop down, come to a premium SIBI, reject. You got to make new lows. It's over with. This looks very bad, very bad. What was I about to say with this? Also, word, fair value gaps. Never forget, people. We want to see bodies respect the area, not wicks. So if you're new to fair value gaps, don't really trip about this too much, because we're not really concerned with the wicks. We want to see bodies hold the area. So as long as bodies hold it, it's still valid. So we held it. We dropped off. I know what you're getting at, Lady Cuz. She said, Tiff, you see what I see? Because my mentees was talking about this in the chat. I know exactly what y'all talking about. I actually didn't say that on purpose, but y'all seen it at the same time. Exactly. Y'all seen it. It's actually another one. Hopefully I can see it. There's like 3 things that happened up here that we talk about in mentorship. Real talk. That could have given you this entry. No cap. 3 things at once right there. But facts. So next thing you know, what you call it, we reject this. Yeah, we making new lows. So let's say you wanted to get involved at the scene of this. Make sure y'all watch y'all mics. Yeah, so there's actually, what am I gonna say? Yeah, let's say you wanted to get into the play or whatever, and if you got this entry, amazing. Maybe you take this entry, fine, but you don't base. Here's the thing. Let's say you enter right now, right? Where is your exit? We're not basing this trade on like a 15-second chart. You're basing this trade off of what we analyzed from the 15-minute, the hourly, the daily, the weekly. So you know you have these targets. Like if we lose this consolidation in the correct manner, you got this thing coming down all the way to London, bro. Minimum, really to the blue area. Minimum. This is a lot of points between here and here. That's a lot of money that's gonna be made. So when you see it play out, how it play out, everything lit, right? And once again, you don't have to hold it on the 15. I'm just showing y'all. Look at this. Let's say you got in here with a stop loss based on this fair value gap. right? You got in here with a stop loss based on that fair value gap. All right. Now, here's the thing. These lows are the lows of the consolidation. Let me zoom out so y'all can really see this. You see this consolidation? Y'all see that consolidation? We want to leave consolidation with what? Fair value gaps, right? So if you notice, let's go replay. There's so much I want to say. Dang. Oh my gosh. Hold up, y'all. Now this happened, what time? 9:30. So let's look to see what happened as you tried to leave consolidation the first time. Did we leave it with a fair value gap? Not under it. I don't like that, but it's cool. Here's what I would do in this scenario. I'll be watching this one. The lower half. Invalidate it with a bullish fair value gap. If you took a loss here, take the loss. You're not losing, you're losing less than 20 points. Less than 20 points. If you can't risk 20 points on NASDAQ, you're oversizing your plays. So you're losing less than 20 points. Cool. If you even took that entry, you got invalidated. I would go cash. I'd be like, all right, next time I'm gonna wait to see if we could lose the lows of the consolidation right here. So I move it from here, the previous lows of the consolidation, to this being the new lows of the consolidation, because this is where we had the last false breakout. That's where the last false breakout went. Put that there, and then let's see what happens next time we try. All right. So this time, which I noticed about this time when we lost the consolidation. Oh, this is picture perfect. This is exactly what you want to see. And you know the best ones don't get traded back to. My fault. The best ones don't get traded back to. Oh man, how scary. How scary the price get right here. Word. So now I got my target from the 15-minute, the hourly, whatever. So you don't have to be on the 15 no more. You can now trade this with price respect in 1 minute PD arrays. So as long as, let's say, price respects this 1 minute fair value gap, you could be really comfortable in your trade. So, and where you want to take it? Where you want to take it? London lows. Ah man, if we run London lows, what's gonna happen? You were coming into that blue area we talked about before. Now you've seen the week ahead of time. So you've really been sniping this downtrend since up here. If you had the mentorship entry, this is a late entry. This is another late entry, but there's so many opportunities to catch a move like this. And then, yeah, we ran the lows that we tapped in. This is lows that we had done the night before. So we lose those lows, and then you want to do what? Anytime you get to a target, anytime you get to a solid target, what you need to do is, that's where I go down to my lowest time frame. So when we lose in these areas, hold up. When we start losing, like when we start hitting certain targets, that's when I come down to my micro time frames, like the 15 second, the 30, the 1 minute, and I stay down there and I see what's being respected or disrespected. Like here, I'm not mad after us hitting the 50% of the blue area, after us sweeping the lows from last night. Y'all see these? That's the lows from last night. That's the lowest price went so far. Notice that after that, price did what? Scroll over. So notice how when we ran that, we popped up. We rejected this fair value, which is nice and cool, but I'm just saying, if you wanted to take profits here, I'm not mad at you. There's nothing wrong with that. But then price ends up going down again. Cool. We ran the lows of the blue area, but then we popping up with some strong bullish fair value guys, and we coming all up in here. This is not good signs that price wants to continue right now. Remember that these projections are based on the hourly chart. So it doesn't have to happen in the next few minutes. That's what I'm trying to paint here for you, right? This is a 15-second chart. It doesn't have to happen right now. So yes, we lost the area. To me, that's a good sign. But that don't mean I have to hold the whole time. So I'm just letting y'all know, like, there's still nothing wrong with getting out your play and getting back in once it goes back in the dominant trend direction. So we might have a retracement because price can't go in one direction forever. But I think by the end of the day, it might turn back around. So for me, when we get to key areas such as the low of a fair value gap, because that's a gap fill. I'm talking too much on here. That's a gap fill though, right? I start looking at what's happening after the gap fill. I'm like, okay, this is interesting. We coming up like pretty strong here. Dang, and we respecting this fair. Hold on, there's nothing wrong with exiting there. There's nothing wrong with exiting over this big red candle either. When I was letting y'all know there's periods here where you could exit your trade, where I also would have exited if I was watching this right here. And so yeah, and then you see price consolidating, but you see it's respecting that 15-minute bullish fair value gap. It's respecting it. Even though it's consolidated, it's respecting it. All right. Oh no. So we're gonna lose the blue area, so I'm gonna delete it. We already lost London, so I'm deleting it. Yeah, I know these was the previous lows from overnight, so I'm deleting that. We already talked about everything up here except this line. I'm deleting this, deleting that, deleting this. I think I'm deleting that. That's gone. And you keep that there. So much cleaner, guys. So much cleaner. I hate busy charts. All right, so we got that. My chart is never busy. That's one thing y'all always gonna see. My chart is never busy. 10, 11. All right, so what are we waiting on here? What we're waiting on is for price to confirm that downside for us, because we already said, like, yo, if we lose this bullish fair value gap, price is gonna run the weekly lows. We just got to see when it's gonna happen. Price might not be ready to make that move yet, so it's okay to just chill and let it play. So price retraces, that's cool. On the live trade, my mentee asked me, she's like, hey, Rel. She was like, yo, Rel, at what point do you become bullish? Because you could imagine that we're actually bouncing here kind of strong. You could see people starting to be like, what if we're getting it wrong today? Because guess what? We not perfect. So even though I had that pre-market plan, I could be wrong. Maybe price did want to bounce right here at these previous highs or something like that. I don't know. And maybe I'm just wrong. But I told her, I said, these highs right here are extremely important for a concept that we talk about in the mentorship, these highs specifically. So I said, as long as price does not invalidate these highs, I am bearish on this ticker. And so what we do now is we watching and we see how price teases these highs multiple times. And I told her we stay cash ahead. We ain't lose nothing. We ain't trade the chop. We seen the chop coming before it happened. We seen the chop coming right here. And we was like, yo, it's gonna chop for a while. We're gonna just set price alerts towards the downside of this consolidation. Because I know once we lose these lows, NASDAQ is dead. So we ignore the chop. We never traded none of this stuff. So you gotta also know how to recognize chop before it happened, which is a whole separate class. But we recognize the chop early, then touch it. Now we looking to see if we can lose these lows. Never ran the important high that we needed to hold. And so we good. All right, so now if you're looking at the movement on the 1 minute heading toward our price alert, we have price alerts around here somewhere. If you look at the movement heading into it, you'll see that like we respecting all of a sudden we respecting very important fair value, guys. Respecting them, creating them, not trading back to it, respecting another one, and then you see what happens after. It got real ugly, right? It got extremely ugly right after that. So once the price alert goes off, and you could get into your trade with a stop loss based on this fair value gap, and you would already made money off the rip, right? This is already a 90-point play. Just this alone is already 90 points. And then price, and I think Trump starts talking around this time. Price starts going sporadic, if I'm not mistaken. It starts getting like really crazy. And let's see, we got a 15 minutes city here. Hold on. We're gonna come back to it. I just want to make sure. Oh yeah. All right, peep. So let me show y'all this. All right. So don't trade when the market is not ready to go anywhere. What I mean by not ready to go anywhere is when you see price consolidating, you don't touch that. Don't touch that with a 10-foot pole, because it's like that's where your account gets chopped up. You have to recognize it early. And something you should look at is if you know what bullish delivery looks like and you know what bearish delivery looks like, and neither one are following through, you're about to deal with chop. Please don't take more than 2 or 3 losses in chop. You're fighting price action, and price action is not a fighter. You fighting chop. All right, so look, you see this type of movement. What's something I've been talking about lately? Well, I've been talking about this for a little minute with y'all. I even put this on Instagram, but like when price moves like this, these moves are fake moves. Like these moves are fake moves. At a point, price is gonna do this and take the whole area back. So we call this engineering liquidity. They engineer liquidity here. And the thing is, I love when we engineer liquidity. Don't miss this. I love when we engineer liquidity into a valid PD array. As a telltale sign, we're going to use that PD array. So there's a 15-minute SIBI here. You see that price trades up into it. This is a trade I took as well, by the way. I got in entries right here, I think. My stop loss is above the SIBI. So yeah, got in entries there, whatever. I was doing good, but I never got stopped out. I was doing good. They came back. I'm like, all right. But I sized this light. I took this in 2 different accounts. So I'm speaking about the account that I sized that light in. The account I sized that light in, I held it. I was like, if they stop me out, they stop me out. But this ended up being a 350-point trade to the downside. But the other account, I had to trade it because I was heavier. I had to like get in and get out. You know how it is. Sometimes you gotta like get in. Oh, never mind. And then get back in again. That's how to trade the other one. But they ended up both being profitable on that day. So price really drops off out of this PD array, and this is what I mean by when price looks like this is fake movement. Notice how long it took to trade back up into this area, and then look how quickly it took the whole thing back. This took 3,000 candles. This took like 15 candles. Like that's the difference. So this is what we do here. And my Instagram handle is Bag Talk Terrell. Terrell is TYRELL. Bag Talk Terrell is my Instagram handle. But if you're watching this on YouTube, all that stuff is in the description box. So make sure y'all check out all the links in the description box that we have in there. And so that's that. We moving. Word, like I mean, this is just a easy hold at this point. Like, and look how it played out too. What do we say if we lose the blue area, which was over here? And we said that if we lose this blue area up here, what are we gonna do? We're gonna run previous week lows. And y'all seen easy money to previous week lows. Very easy money. You just had to wait for like the Trump nonsense. This is Trump talking right here. A lot of nonsense was going on, but guess what? It's still respected. It still respected the PD array that it needed to respect. Filled it out perfectly, and it dropped off. And that's what I mean by we don't care what the news is talking about. We don't care about any of that other stuff. I don't care about earnings reports. I don't care about anything, bro. I care about these candles. At the end of the day, what's supposed to happen is gonna happen. That's why we call it before it happens, to just prove that to you guys. Because a lot of people teach you that you can't predict the market, man. It's news. Who could have predicted that price was going to do this and do that? And it's like we literally doing it every day. Because price will do what it's supposed to do. I don't care if Trump is talking. I don't care if freaking insert important person is talking. It does not matter. I don't care whose earnings report. It don't matter. Price is going to respect what it's supposed to respect, and it's going to do what it's supposed to do at all times. So that is that part. And we end up trading into this VI right here. That's what it bottomed out at that day. Because price meets objective. That was the bottom that day. This PD array. So the low of the day is filling out this PD array. Coincidentally, of course. Because that was literally the low of the day right there. The day that was the bottom. That's about 310. Oh no, this is by my fault. Yep. At 340, we bottomed out, and then we pushed up to close the day. I know I had some mentees who played this upside as well. But yeah, we man. So just look how, based on all of our planning, starting from the weekly, you're able to basically, even if you take it within like 2 or 3 separate plays, catch this whole downtrend. Starting of the week. Come on now. So I'm weak. I just seen something in here. Okay, so can I get 1s and 2s if you got something out of that demonstration? Or did I lose y'all? Do you guys look at this and say, man, this guy is talking a whole other language? I don't know what he's talking about. Can I just get 1s or 2s if you got something? I know I use vocabulary you might not have been familiar with, concepts you might not have been familiar with. I understand that. But like, even if you take a couple things, it could still help out. You don't got to understand everything. King of the acronyms for sure. All right. So a lot of 1s coming to the chat so far. So far, that's helping me know that it's actually resonating with people. All right. Cool. I'm just saying, and okay. Yeah, I mean, also it'll be hard to write out everything. So it's a few reasons why I use a lot of acronyms. It's a few different reasons. But yeah, okay. So let's keep it moving. Let's keep it moving. So now, by the way, do y'all see that? Like, this is what I'm talking about. These choppy moves be the fake moves, bro. Do not believe in these. This is coming soon. You just gotta be patient. Like, this type of price leg is coming soon after that. Just please be patient. Look at it over here again. You could tell what the real direction of the market is. It's not this. It's this. It's not this. It's this. And it's not this choppy one. It's this, right? Like, come on, you see it. You could just see it all over the chart. So you got to really pay attention to movement. People just be thinking, oh, price is going up, price is going down. No, look at how it's going up. Look at how it's going down. It's like in real life, they say like it's not what you say, it's how you say it. So it's not what the chart is doing, it's how the chart is doing it. Same vibe. Same vibe. Yeah, we going up, but ask yourself, how are we going up? And it'll help you know, like, okay, well, if we're going up like this, what do you think we're going up for? I wonder if there's a PD rate that we might reject. Oh, snap. It's a 15-minute bearish trade value gap right here. We might. Oh, so maybe they chopping into this area, and then once they tap into the area the right way, it's going to flip over and give us a move like this. Oh, snap. Wow. Would you look at that? Who would have thunk? Crazy, right? All right, so that's just a quick side note. Delete all this stuff. Never invalidated the important high that I was talking about, right? Nothing. Never talked about, never invalidated that. Should be gone. We don't need none of that. Let's take this, I guess. We can delete that now. How beautiful. Okay. So I see somebody said that 15-minute fair value gap was key since it was located at a low. Multiple reasons why it was key. Who would have done bear flags? I know he hate patterns. I definitely hate patterns. Ain't no freaking bear flag. I'll debunk bear flags all day long, bro. How about this? Y'all see a bear flag right here? I know I see one. What happened here? What happened? I thought, ah, man, that's crazy. That's a bear flag. I don't know, man. Who knows? Come on, man. Don't get me started. He started. Yeah, man. People looking at, and then it's like the other thing is say, okay, where you take profits at? Where's price actually trading to? So even if you play a flag, oh, this flag is successful, and it's like, do you know where price is really trading to? Because I already told y'all, like, since price is up here, we already know we coming all the way down here. We know this is about to happen in the stock market. We know that already. There's nothing to the upside I believed in the entire day. The entire day. I know we're coming down. It's like, what is your target? Where is price trading to? Where is the precision in? Like, okay, yeah, I could. This flag played out, yeah, but you took profits mad early. You're missing out on a whole 400-point play. You took 40 points. This play is about to run for 400 and you took 40. Because you don't, like, these patterns and stuff, there's no purpose to it. It's just arts and crafts on a freaking chart. Like, come on. What are we doing? Price trades for very specific reasons. It's not just random movement. There's certain things we targeting at, and up to the upside, into the downside. Not real life. But I gotta get a disclaimer, even though it's annoying to say. Let me get my disclaimer. It's some fire traders that trade patterns. It's some fire traders who trade the strat. It's some fire traders who trade candlestick patterns and trend lines and freaking, what else they be trading? Elliott waves and what else they be doing, man? It's some fire traders who trade fair value gaps and smart money type concepts. So it's fire traders of all types. Risk management is the main thing. I'm just telling y'all, if you combine your risk management, your psychology with this strategy, I do believe it's the best strategy because it's the most precise one. You have the smallest losses. You understand what the market is trading for. You have the best entries. You know when you're wrong the quickest. Like, it gives you the most precision. So just combine psychology with this versus combining psychology with something that is less precise, put it like that. Because it's not like, oh, when I learned this, I'm gonna be the best trader ever. No, once you learn this, you're gonna still have to master psychology, or you're gonna be an unprofitable trader forever. So no matter what, you're gonna have to come to learn your psychology no matter what. It's just that master psychology with this instead, in my opinion, for the reasons listed. For the reasons listed. No, I appreciate you, DC. I be quizzing that too. Like I survey that. Like especially for people that take my mentorship, I survey it. Like I've asked a cohort before, like heading into the mentorship. Of course, people come in hearing what we're all taught that the market moves based on news and all that stuff, and it's not rigged. Of course, why would they tell us it's rigged? But by the end of our mentorship, I've surveyed everybody. Like, do you guys believe that the market is rigged now? That price is predetermined? And 100%, not 99, 100% of my mentees said yes, it's rigged. Like, because once you see it, you can't unsee it. Like the stuff is undeniable after a while. You're like, okay, there's something at play here that we not privy to, and it makes sense because for a market that's worth trillions of dollars, why would it be fair? Like, does that even make sense? Like, it's worth trillions of dollars, and there's not going to be corruption. It's not going to be rigged for those to stay on top. Like, come on. Like, just think. Like, really think, and be like, you know what? It's actually more naive of me to be saying because people might think I sound crazy at first, but then I think they sound crazy by saying that the market is fair. I'm like, you really think it's gonna be fair with that much money involved? And then it's like, cool, it's fine, I believe it. Let me just show you on the chart, and then I show people on the chart week after week, and they seeing these certain areas get touched, and I'm calling the market out ahead of time, and they're like, oh snap. Well, dang, I thought he was getting lucky at first, and I'm like, yo, maybe he's not getting lucky. It can't be lucky. Like, how the heck? Like, I'm sorry, I just think this is crazy. Like, bro, how on July 7th, when prices down here, I'm saying SPY's gonna top out on here and we could have a potential bear market. On July 7th, I'm saying that SPY's gonna top, bro, it's on video. Go on YouTube. I already posted the clip multiple times. It's no rap, there's no cap in my rap. So it's like, how could a person know the all-time high 7 months ahead of time? How lucky of a guesser am I with? Like, I gotta play the lotto or something. Like, I gotta be the luckiest man on earth. Like, no, maybe, just maybe it's something there. Maybe there's some information. Because whether we get to a bear market or not, the market's still corrected. So to even call out a correction in the market 7 months early is still something. Like, this level was obviously significant. This is an all-time high. Price never been here in life. So you can't say, oh, it was a supply zone. It wasn't. No, bro. It was not, none of that. We never been here before. Never been here before. Like, come on. And if we head to a bear market, that's just even more evidence. Like, come on, that's gonna be. Let us head to a bear market for real. Y'all don't really talk my ish because people really was doubting me. I had people replying to me on threads, saying all types of stuff, making it seem like I'm crazy. All right, where they at now? They super quiet. They super quiet. Now, as we continue, because once again we rejected that daily sippy. I see what happened. Because I have a bearish direction, I'm expecting price to respect bearish PD rates because I framed it with the weekly direction. So I'm expecting 4-hour PD rates to work because the weekly told me we're going down. We have not gotten to my weekly target yet. So I'm expecting 4-hour PD rates to work. So I like to pair the 4-hour up with the weekly. That's my favorite time to pair up with weekly direction, 4-hour PD rate. So Pete, y'all see this 4-hour SIBI. You seen price was dancing on this 4-hour SIBI for a very long time. Last week was not easy to trade. Let me say that right now. Last week was not easy to trade. All right. Now, but at the end of the day, what I say about fair value gaps, as long as bodies is holding it, it's valid. Y'all seen 4-hour bodies holding this 4-hour SIBI. That's why I believed in this, because to me, there's a couple of reasons why I believed in it. I ain't gonna lie. But I'm sharing with you guys one reason I believed in it is, once again, weekly direction, 4-hour PD rates. I believe in this. Because if it wasn't this, what would it be? Think about it. If it wasn't going to be this, what are we going to reject on after that? Ain't nothing up here. Ain't nothing to reject on. We was just going to fly. So it had to be that. That's on my, yo, as long as bodies hold that, I'm bearish. Bodies held it. Boom, drop down. What did this wick tap into? 4-hour SIBI. It's also a simultaneously hourly SIBI. Also hourly SIBI. Right at the 50%. Dropped off. Cool. We rejected here. All right, this hourly SIBI is important for multiple reasons. Mentees, y'all peep it. Y'all see painting going on mentees. So there's multiple reasons why this fair value gap is important, but this is another thing I put out. I said, as long as bodies respect this, I'm bearish on NASDAQ. Seeing bodies respecting it, yep. And y'all seeing we ended up dropping off on Friday. And I said, this is NFP, mind you, y'all. The most important economic event in the freaking world, NFP. It's supposed to be quote unquote unpredictable. But I tell you guys this, I see NFP is a two-sided delivery. The first direction that NFP gives you is usually a fake out. So let's look at that first candle on NFP. What it looked like when it first came out. Show y'all something. Where's at? Oh, that's my fault. Okay, look. You see this big green candle? That is the NFP candle. That is unemployment numbers. The numbers came out, swept sell side, runs to buy side like this. And at this point, you might be thinking like, oh shoot, Rel got it wrong. Like, we going up today. We not bearish. And I'm like, yo, as long as bodies from the hourly chart respect the blue area, I'm bearish. NFP, the first direction is usually a fake direction. The first direction is usually not the real direction. And then we seen price deliver all the way to the downside. And what I said was, if we go to the downside, my target to the downside is this yellow line, 19,818. That's where I want to see the market trade to today. After we hit that, we consolidated because the objective was met. And then we ran to the upside after that. That's it. And that was how the day ended. So you shouldn't hope and hold your play, because the thing is, once objectives are met, that's when retracements are liable to happen. Don't get caught holding a bag in here. And by the way, let me repeat, last week was not easy to trade. So you see how the price was moving? This is not easy. I was scalping the heck out of this to the downside. I wasn't holding this whole thing. I didn't hold through all of this. No, I'm not a magician. Anybody who held through this whole thing, shout out you. Options is easier. I'm talking about futures traders. Options is easy to hold because if you size it the right way, you could just be like, yo, honestly, if I lose $100, I lose $100. No, on futures, bro, every tick matter. Every tick matter on futures. So any of my futures traders know that. You got to actually respect your stops and pay attention to signatures. So even though I know the market is going to 818, right? Even though I know the market is going there, I had to scalp this whole drop. Like, look how wicky it is. I had to scalp this whole drop. I know where it's going, but it was real difficult to hold this trade. You know, you had some nice little segments, but it wasn't really easy hold. So someone said how you decide your targets. There's multiple ways I decide my targets, but this is liquidity. This is liquidity target. So there was a sell side pull down here that once we tag that, let's head back to the upside, and then before maybe the potential next downside. But if anything, get out the way while it retraces. We've been going down for a little minute. Yeah, options, the Greeks could clap you on 0 DTE. But trading this drop with even a weekly you would have made money. So yeah, just like anything else, you know, if you take it the risky way, just know there's always a downside to that. Because if you want to do 0 DTE, you're like, oh yeah, I'm gonna make mad money today. But like, if your contract expiration expires this afternoon, you hurting yourself. If you know where it's going, sometimes it's best to just take the weekly contract, the 2-week, the monthly, because at least you know you're gonna make money. It might not be as much money as watch out mics.
You got Mount Forex. No, on futures.
All right. So what you call it? Forgot what I was saying. They threw me off low key. But yeah, word. So just risk management is all I'm saying. SIBI is a bearish fair value gap. It stands for sell side imbalance, buy side inefficiency. All right. But it's just a bearish fair value gap. That's all. Yeah, you're welcome. All right. So this blue area was a hourly bearish fair value gap. So we wanted to see bodies hold that, okay? So that's that, and then it ended up playing out, obviously, And then this is where we are right now. Like even after Friday's rally in the afternoon, I don't know if y'all peeped that. Look where price closed at. Look at the bodies. We still respecting the same hourly CB we talked about Friday morning. Still respecting it. Even so now, the market opened up and dropped. Now, I say this every time we do this. Every time the market just opens up and drops right away like this, I don't believe in it. So I am looking for price to move back to the upside, back above these highs. I'm not sure how far it'll go though, right? Like I still want to see what we do in this area here, how we treat this gap. I still want to see how we treat that gap. But my point is, I don't think we're just going to continue to the downside. Like I know it looked good at open, like, oh shoot, price opened and just dropped. I think we're gonna end up coming back up. I think we get to stay in this range largely for a little bit. CPI is Wednesday, but I'm about to talk about that stuff anyway. So let me start deleting a little bit of things here so we can really get into it. I don't need this no more. And I don't need that no more. So this is me clearing my chart off. Like I only try to keep stuff on my chart that I really need. Like when I have this chart, the only things I need right now, I don't even need this sell side thing no more because we swept it. So now for me, I'm really concerned with new lows right here. So I'm gonna put PWL for previous week lows. So I know if we run last week's lows. That's it. So right now I got the PD rate that we're continuously respecting. I got last week's lows. These highs right here are important to me. I'll talk about that in a little bit. So that's why I still have this label. And that's it. That's all my chart has on it right now. That's it. That's all I need. All right. Cool. So but with that being said, let's go ahead and get into chart debate. We gotta talk about the chart debate. We gotta get to the chart debate, man. Gotta get into the chart debate, my people. Yeah. We gotta get into the chart debate. Hold on. Let's see what we talking about here, man. All right. So this is the chart that was posted for the chart debate. Yeah, I almost skipped it. This is the chart that was posted for the chart debate. You guys can see here that you have to choose between line 1 and line 2. Which one's gonna get hit first? The free community it was a close one, I ain't gonna lie. But line 2 is winning so far. But it's definitely a close one. 27 out of 48 people picked line 2. On my social medias, the most popular answer was line 1. So we got social media picking line 1. We got the free community. It's close, but they picking line 2. Let's tap in with the good old mentees and see whose side they on. I'm nervous. Let's see what the mentees is talking about. Mentees seem to be getting it right every single week. I don't know what's up. Are they getting lucky every week? I don't know. Let's see what the mentees think this week. Is this the week that the mentees get the chart debate wrong? Oh my gosh, they're not even. Yo, mentees, y'all might take an L this week. Let's find out. Because it's 34 y'all picking line 2. And just one person picked line 1. Just one brave soul. Mentees, what we talking about? Mentees, what we doing? Are y'all about to get embarrassed this week, mentees? Y'all on a hot streak. Y'all getting this right every week for like a year. All right, let's see what y'all got, man. Here comes the answer. Line 2, the mentees, y'all got it again. But shout out to the free side. The free side, yeah, majority of the free side got it right. 27 out of 48 people. It's really the social media people that got killed. It's really social media that got killed this week. So shout out anybody in the community, free side, mentorship side, it don't matter. Shout out the community for getting this correct. Line 2 is definitely the answer over here. All right. I see y'all. That's what's up. Shout out to people that got it right. Shout out to people right. I'm proud of y'all. Yeah, real nice. We dropped off pretty hard too, huh? Really killed line 2. It's all about them signatures. And so, you know what's funny is like people trade market structure. Market structure is telling you that we bullish. Let me correct something right here for y'all. Don't get caught up with this. This is a big mistake for market structure traders. Big mistake for market structure traders. They think because we ran these lows that we're in bearish market structure. Now I know that price went down. I know. So they're right. That doesn't mean it's necessarily that repeatable for them if they're going to trade market structure for direction. I want y'all to understand the difference between internal and external structure. Understand that this is the external structure using this low and this high. Anything in between this is internal structure. So price could have basically done that and still came back to the upside. So be very, very careful. Don't get it messed up. I don't trade market structure, but I'm just trying to help out the people who do. Don't get it messed up. All right. Now, technically, if you misunderstood market structure, you still got it right today because you might have looked at this as, hey, price turned into a bearish structure here by closing under these lows. And so therefore it's gonna have to close under these lows. Just know that that's not always true. That's why I don't use market structure in the first place, because of that. I have other ways of knowing we bearish. But that's why I teach the mentees, and that's why they understand how to know if we bullish or bearish, and you could tell a price is going ahead of time. So yes, even though we're right here, and you see line 1, you see line 2, there's no news event that I'm talking about here. There's no time frame. Y'all don't know what market this is. So I'm sick of people saying, it's futures. You know, I trade options. Or it's, how you know this is a futures chart? How y'all know this is not a Forex chart or a crypto chart? Nobody know. I don't give you guys the ticker. I don't give you the time frame. I don't give you the time or the news, nothing. I give you a naked chart, and you're supposed to know what happens next. Because guess what? It's very possible. If you don't believe that it's possible, why do the mentees get it right every single week? They get the same information as you. Y'all don't believe me that they get the same information as y'all? First of all, they in the chat. They in the chat. Second of all, just look. They getting the same information as everybody else. It's nothing different. Look at the every one of them got it right last week. Every single one. And nothing different. It's all the same stuff. So yes, you could understand what's gonna happen next by just looking at a naked chart. Mary said, I used to get so stressed on these chart debates in the beginning. The mentorship has helped me get better on these. I appreciate you. You've been doing your thing. Real talk. All right. So yeah. Now let's talk about what's happening this upcoming week, and then we're gonna wrap. Tiffany said, beauty of price action. You don't need nothing else. Thanks, mentorship. And thank you to the people in the mentorship, because y'all really work hard. That's why I like the culture in there. Y'all really work. Like, yeah, I'm giving y'all information, but it's still on you to execute. It's still on you to study. So like, shout out to y'all in a real way. Like, y'all the ones that put in the heavy work in. Y'all be killing it. The word. So Monday, nothing to talk about. Andre said studying like a madman. I real talk, and I give homeworks for almost every class. I give tests, I give quizzes. It's intense. We got a final, we got a midterm. It ain't no little, like, nah. The mentorship is like 4 months long. 4 months of all of that. It's a lot of information. We do class twice a week. It's a lot of information in there. So you definitely got to come ready to work. It ain't no, if you think it's just some nonsense, you in the wrong place. It ain't like college. He said, like, it's life changing. Yeah, I'm looking forward to mentorship too, yo. We gonna kill it next semester. Tiff said mentorship is the best thing in my life, for real. That's love. Tiff, a major part of the community. And I'm gonna get to all of that, MG. I got you. It really is like college, man. It's a fact. Yeah, Molly, we're gonna get right, bro. We're gonna get right. So, all right, let me lock in. Let's lock in. Let's finish our class on this part, right? Let me say this one last thing. He said that every semester, I swear, Rel grows as a teacher as well. So y'all in the right place. Thank you, Alexis. I noticed that within myself. I care about teaching. Y'all know I'm a credentialed teacher, so I actually try to grow as a teacher. My knowledge grows on the chart. Everything I know, I share it. I don't hold nothing back at all. So yeah, yo, real talk. We all getting better in different ways. So let's get it. Yo, Monday, nothing to talk about. Tuesday, we got job opening. Not really that important. That's at 10 a.m. So my point is saying it is Monday and Tuesday, I think, is not going to give us much. I think Monday and Tuesday will generate the liquidity on both sides that CPI will destroy. So if I see CPI on Wednesday, which is the important event of the week, I think Monday and Tuesday will engineer liquidity. So let me draw that on this. How y'all draw that over here? What I mean by engineer liquidity, honestly, it could look like this. This is fine. So imagine it's the hourly chart. Can we use our imagination real quick? That's the hourly chart. Monday and Tuesday will do things like this. It'll build up liquidity on both sides, meaning people have stop losses on top of the consolidation. They have stop loss on the bottom of consolidation. Who's going to win the battle? Well, they'll engineer it so that we're all trying to make a decision, and then they'll use a news event to destroy that liquidity. So this is what like CPI would look like. The red. This will be like Monday and Tuesday over here. CPI is Wednesday. That's what will destroy the engineered liquidity. So that's my point. That's kind of my expectation a little bit headed into this week, that Monday and Tuesday is going to kind of like consolidate, have a lot of like support levels created, resistant levels created. CPI will destroy those same pools that we created. And so question says, so basically don't trade. I don't want to say necessarily not to trade. I say trade with lower expectation. Also, I might say to maybe decrease your sizing, at least initially. If you're noticing that the market is trending crazy, you could always add to your position or something like that. But I would say don't go in Monday like, I'm about to full point, yo. Today the day, I'm full point. If you're gonna move like that, at least move like that on Wednesday, like Wednesday and Thursday. Yeah, and I agree, set price alerts. Word, that's a major thing, set price alerts, stuff like that. So yeah, we talked about Monday, Tuesday, Wednesday. I think Thursday is PPI. That's decent. Friday, consumer sentiment. So honestly, I think Wednesday through Friday is going to be very eventful. Monday and Tuesday is going to be engineer days. So that being said, let's go to DXY. Man, DXY. Now, my mentees, they ain't got the update on DXY. You guys, I ain't gonna lie, I haven't updated y'all about this, but I need to explain something because I got it wrong last week on DXY, but like I shouldn't have gotten it wrong. I'm gonna explain what I mean. So basically, put it like this. If you guys been following me for a while now, right? I told you guys based on the weekly chart, you see this weekly bullish fair value gap right here? I said I am literally only bullish on DXY if the weekly could hold this. Okay, what do you notice? Do you guys notice that the weekly right here did not hold the blue area? Once we lost that blue area, I told everybody, yo, I got DXY coming, my bad. I got DXY coming all the way down here. I said minimum, big minimum is just coming to this monthly bullish fair value gap right here. Big minimum. Major minimum, because I think it's going to go even lower. But my point is, we got a huge drop that's about to come to DXY because we lost this blue area right here in the weekly. All right, cool. So based on the weekly chart, I got downside direction. I should be trusting my daily PD raise, my 4-hour PD raise. Let's talk about daily, right? Okay. All right, so look. I know this happened before that projection. I was saying, notice we rejected one and created one. Notice we rejected one and created one. We rejected a bearish fair value gap. Shortly after, created a bearish fair value gap. What do you notice? We tapped into it. We used it. And then we did not get to my first target to the downside that I gave on the watch list. My first target. All right, now price starts to come back up. And I say, yo, this is on a watch list now. Remember, this green candle, let me circle it. Y'all see that green candle? At the top. That's all I seen coming into our watch list class last time. So when I see this, I'm like, all right, we about to disrespect this fair value gap. So I was like, never mind. But the analysis is based on that fair value gap. So I should have updated you guys. But when Monday did this, I was like, never mind. I have class on Mondays. I have class on mention on Monday. I'm like, never mind. We still bearish. But I ain't update you guys in the free chat. That's my fault. I should let y'all know. It's like back to bearishness. Never mind. Because this is one of the times where we reject the fair value gap twice. It happens. It doesn't happen often, but it happens. So for me, I can't flip bullish on DXY unless we invalidate this fair value gap. We just used it twice. What do you want me to say? But once again, that's on me for not updating the chat. But like my analysis is correct, but what I said last Sunday was incorrect. So we was not bullish, and man, that thing dropped the heck off. Sheesh. Like sheesh, we jacked up. And so pretty much just back to my original analysis here on DXY. So I'm really speaking mainly to my Forex traders when I say this, because I have y'all in the group. So I'm, just letting y'all know. Once I seen this whole area, we remain bearish. And so minimum, I still think we have more downside. Minimum, we should come into here this week, the monthly one. But for me, I'm mainly looking at the weekly one, which is the yellow line. So on the weekly, you'll see a fair value gap all the way down here from September 30th. All right. I just want to know what the opening price is to that fair value gap. 102.292. I have that marked off. If you want to play ultra safe, maybe you just want to know when DXY taps into this. We're already almost there anyways, but look at the monthly chart. There's a bullish fair value up there as well. All right, so we'll keep our eye on both areas. So if I think DXY got a little more downside, now when you look at these dollar pairs, you see euro made its way to the upside. It broke out, and when we break consolidation, we want to break it with what? Want to break consolidation with what? Oh, you see it. Dang, we didn't even trade back to it. Oh yeah, we love that. We love that. Facts. That's exactly how we supposed to leave consolidation. It's exactly what it's supposed to look like. So they breaking up. I think we're gonna run these highs. So I would keep euro bullish here. We shouldn't really invalidate the upper half of this daily bullish fair value gap prior to running these highs. So we should get there first before we invalidate the upper half of that. And right now, I think my next projection is aiming for this weekly SIBI. For now, it might go higher, but for now, there's a weekly bearish fair value gap. I aim for that on euro as my next destination on euro. Coming to that. All right. British pound, same thing. They broke out and all that stuff. So, we already invalidated. Invalidating this bearish fair value gap is so important. It's an expectation. I would never look in this context. I would never expect this in this context. I'm just saying the fact that it did trade through it is a very good thing for the bullish people in the room. And so now I'm looking at the same thing. There's a fair value gap on the weekly chart right above. I think we finna head here next on British pound, and then USD CAD. So I'm looking for downside direction there. What is this blue area? Oh, that's fine. We don't need that blue area right now. Looking for downside direction. I don't see a good setup though in here. I don't see a good setup. So because I'm expecting downside, maybe you just take last week's lows and take breakouts of last week's lows, because under that, we most likely gonna run these lows down here. So maybe price starts around last week's lows and then trust bearish PD rates into 1.41. Okay. 1.41501. So under these, trust bearish PD rates through these lows. That's how you can trade that. And then we almost done with Forex. I got one more Forex. Swiss franc. All right, so yeah, I mean, I have this listed out because that's a target for me running these lows here. You wouldn't want to see price. Listen, if this candle closes red, I know it's early in the day. If this closes red and we make a fair value gap like this, the next day, so this would be what, Tuesday's candle. Tuesday's candle should not invalidate this fair value gap prior to running the yellow line. Because I don't update y'all on Forex often because I'm mainly a future trader with a little bit of options, but I try to cater to everybody in my group. So if I don't get to update you guys, I'm giving you a plan. If this is a red candle, but we do not run the yellow line, if price were to come up here first, we want to see this respected so we can trade back down. Otherwise, we're probably going to witness a much deeper retracement into this range. All right. And then I wouldn't want to see it invalidate these highs right here. Otherwise, you're probably going to see a major reversal happen. So these highs are also extremely important right here on this ticker. But I'm expecting to trade through the yellow line below. And where to after that? Let's just double check. This is a major low to run, by the way. If we can get a weekly closure under here, this ticker honestly is going to come into these lows. It's going to run both of these lows. If we could close under this yellow line on the weekly chart, this ticker should be running these lows next. My opinion. All right, quick, crypto. Well, what do you know, people? Last time we met up on here, y'all, the chart looked like this. What did I say? I say, yo, Bitcoin is trading between this very important weekly BISI and this very important daily SIBI. And I said, I do believe that if NASDAQ is going to be bearish, it's going to take Bitcoin with it. So I think that the daily SIBI is going to win. You could watch this area because it might consolidate in here. Why would it consolidate? Because we traded between two valid PD arrays. That's why it could consolidate. But I think by the end of that battle, it's going to choose downside. All right. So how did the week play out? You see it consolidates, right? Because it's battling between two valid PD arrays. But you see who's starting to win the war. We're going to see how it play out, but you see who's starting to win the war. The SIBI. I think if we come under these lows, Friday, February 28th lows, I think, which is monthly lows also, by the way. If we run the monthly lows, I think Bitcoin will continue. And I ain't gonna lie, man. I don't think it looks good for the coin. Yo, so I'm gonna always base Bitcoin on NASDAQ because it's not like NASDAQ gonna be in a bull market and Bitcoin's in a bear market. They're gonna be in the same type of market together, most likely. And so if NASDAQ continues to confirm downside for us, I got Bitcoin. If Bitcoin could lose 70, I got it going back to the 40s. Now I'm on camera saying that, but I've been saying that for a little minute now to like some people I know personally. But now I'm on a public platform saying it. So I do believe if Bitcoin could lose 70, I can see Bitcoin coming back into the 40s. Not gonna lie. So it could get real ugly on the coin. Something that it could get like that. It could get like that, but we gonna see. I think we really need to clear this area. This area is so important for Bitcoin. It's so important. This weekly fair value gap. That's why, like, I'm not getting overly bearish on Bitcoin until we lose that. As far as my Bitcoin swings, I've been told you guys I sold Bitcoin somewhere in here, somewhere in this mix. I've been got out of my Bitcoin swings, because it did certain things that told me we're gonna have a big drop off, and on top of that, y'all know I've been calling out the NASDAQ and the S&P drop off, so I knew if they was gonna drop, they gonna take Bitcoin with it. So I was able to exit my positions, but we'll see if it pops back to the upside. Cool, So we'll see how it ends up playing out. See how it ends up playing out. I was gonna say one more thing, man. Oh yeah. So when I look at Coinbase, still talking to my crypto people, and then we gonna move back to the futures type vibe. So Coinbase, mentees, y'all peep the PD array. Important PD array rejection right there. Something you will want to see as a bullish person is this. This is what you want to see as a bullish person right there. You want to see this monthly bullish fair value gap on a monthly. You would love to see this work out to take us higher if we're gonna run the all-time highs. All right, it had to work. I ain't gonna lie, this was the one. If that don't work, it looks bad for Coinbase. So when I seen how, look at this green candle. This green candle tried to use it, but it failed. You see, that's the failure swing. Notice that price tapped into the area, tried to go higher, staggered, and then ended up falling short. That's tough. That's bad. That's bad. That's bad. Because now that's telling me, yo, the monthly is telling me to stay bearish on Coinbase. So I trust 4-hour and daily bearish PD arrays. So let's look at the daily one for now. I'm not really trying to see Coinbase come back into this fair value gap. I would prefer that Coinbase rejects this fair value gap. I was explaining why to my mentees last class. My mentees should know why. We don't really want this one. You could watch it, but we don't really want that one. We want this one. It's consolidating here. I think it's going to continue to reject this blue area and trade even lower. If we run the lows from last week, I think Coinbase is going to continue dropping to the downside. So, and I think it should be able to run. Honestly, all of these low, Coinbase probably come under 145. If you want to play it safe on Coinbase, you could take it to the lowest body on the monthly chart. So that'll take you to 178. If you want to play it safe, take it to 178. But my point is, I think Coinbase has more downside. So I don't think Coinbase is going to be moving to the downside while Bitcoin's in a bull market. So I use these things as confluence for each other. When I'm seeing Coinbase giving me bearish confirmations, respecting bearish PD raise, I look at Bitcoin and I see Bitcoin showing me respecting a bearish PD raise as well. And I believe in them both to take us to the downside. And then so that's crypto for you. And it'll take everything else. Like I done broke down certain other tickers already, but like Cardano, like everything looks very bad. I'm not gonna tell you guys the ins and outs of why, because I'm trying to like get through class right now. But all these tickers have extremely bearish setups right now. Like it looks terrible. Cardano, Ethereum, Solana, all these things. I think I talked about it last week, why these highs were so important on Solana to not violate. We didn't violate those highs, as you can see. And we've been trading down. Now we're about to lose the lows of February 28th. Now we're about to lose those lows potentially. I mean, we swept it, but are we gonna like go aggressively under it? Like, and then XRP here. I think if XRP were to lose this 1.768, meaning the lows from February 3rd, February lows, if it loses February lows, like look out below. So quick recap on XRP, and then I'm moving on from crypto. Somebody asked me about XRP when price was around right here. And I said, as long as XRP could hold this purple area, this daily bullish fair value gap, it's going to run all-time highs as long as it can hold this area. It consolidated here, then it ran all-time highs. Beautiful. But then what happened? After that, it got real ugly. And technically, we still holding a daily bullish fair value gap. So that's why I say I feel like it's going to trade down. But then I don't really believe in the downside. Let me not say that. I believe it's going to trade down, but I'm not confirmed. I'm not confirmed on downside until we run February lows. So if anything, there's like price lows that could be set here. Because I think under this, XRP is dead in the water. And I wouldn't take it until it's below $1. Under $1 is my next spot where I feel like XRP has a potential to come back to the upside. And that doesn't mean I think these things are going to die. I believe in XRP. I've been talking about XRP since I've been on YouTube in 2020 or 2021, one of them. I think 2020. Either way, been talking about it publicly for a minute. XRP, Bitcoin, I love these things. I think Solana has a future. I'm just speaking about the intermediate term right now for whatever pullback the market might have for us. So we will see how it play out. Those are my projections on crypto. Now let's go back to the NAS world. NASDAQ. So I already kind of gave you guys some sentiment about NASDAQ. Let me tell you some bull cases right quick. Here's a bull case. What did I tell you guys earlier in class about price legs that look like this? I know, right? What I tell y'all about price legs that look like this, it's these things don't like, it's not clean. It's like zigzaggy, staggered. So at a point, most likely price is gonna end up popping back to the upside to take that, unless we get some energy, maybe like this week, where we get like a large aggressive candle like that, and then at that point we not coming back for a little minute. So once again, I think like CPI this week is very important. I want to see what it do, but just understand the bull case. My antennas are up because I notice how we moving. The way we moving is not ideal for downside. So don't ignore that. Please don't ignore that. These stagger moves is what we call engineering liquidity. This trend line type stuff is liquidity. At a point, it's going to get violated when order flow shifts over. So when I start seeing PD rates getting invalidated, that's supposed to be bearish, guess what I'm gonna start flipping? I'm gonna start flipping bullish. Now, am I expecting all-time highs after that? I wouldn't go so far and say that. I'm just gonna remind you guys that price, after it meets objectives like it just did, at a point it has to retrace back into a premium before potentially coming back down. So if we were to pop back to, let's say this week is bullish, and we pop back to the upside, I'm letting y'all know right now, this is the area where I'm looking at that's gonna make it's gonna make every decision for NASDAQ for a little while. If we pop up in the upcoming week or so into this area, this is where I can see reversals happening back to the downside. And if we do not reverse back to the downside right here at this fair value gap, I think we're going to run all-time highs. And there's no in between. All right, so this is a bull case right there. That's a bull case for you. What do I think will happen? I think it depends what price looks like headed into CPI. Like what happens between Monday and Tuesday. I already told you guys, because price opened up and dropped right away, I think we are going to come higher. And I think it's likely that we're going to have an hourly body fill out this area. So what I mean by that is, you see this red wick? I think we're going to have an hourly body close on top of that red wick. There's going to be a body overlapping the red wick. I can see that happening on the hourly time frame. So I do feel like we're going to end up pushing back to the upside. So it's like, are we going to push back to the upside but still reject the blue area? That's possible. Or do we move past this? If we move past this, I really need to see what price does up in here. Because if price moves past this blue area, then at that point, to me, I think we're going to have a very big retracement in the market. So you almost can say if NASDAQ can make its way above like 20,000, let's give it room. Let's say 20,550. About 20,550, I think NASDAQ can make its way all the way up in there at 21,500 basically. So that's like an 1,000-point move. So there's no need to be impatient on it. Like I said, watch for more downside anywhere under here. We'll look at all of our bearish reversal signs anywhere in this whole area, anywhere. We'll watch. But once we come above the area that I highlighted for y'all, I think the next destination is right here. Then we'll make decisions. I'll be able to update you guys in the chat about this if we get in here. I'll let you know if I think we're going all the time or if I think we rejecting. But that's it. I hope you guys understand the plan. Either way, you could always rewind and watch it on replay. Now, if the bearish plan works out, which by the way, let me make it very clear. Based on a weekly chart, I have NASDAQ running these lows down here at 17,113 based on a weekly chart. Okay, let me make that very clear. So I don't think that NASDAQ is actually bullish because the weekly tells me we should be moving lower. I'm gonna keep it real with y'all. I've been put this out since December, and on December 31st in my Discord, I gave these downside destinations. So where's December 31st? It was up here, like, yo, in the Discord, right here, this week. I said like that. I drew an arrow and I made a picture like that. I said my projections. And so price haven't done anything since then besides consolidate, but we're finally starting to drop. So are we going to start that move into here? We about to find out. But we will see. We will see. But yeah, I got plans for both sides, and I don't marry any destination. I only marry delivery. So I'm going to always trade what I see, but I can give you guys my predictions, the things I see that's going to happen in the market. And yeah, it's been scarily accurate for well over a year, but that's when I'm not perfect. I'm going to get certain things wrong. It's going to happen. It hasn't happened in a little minute. It's going to happen. I don't want it to happen, so knock on wood, but like it happens. So just got to get that disclaimer. I'm not perfect either, and you'll never be perfect in this game. Low-key, I was reading something in the mental game of trading this past week. I told you guys I had a day where I tilted. I had a really bad disciplined day last week. Had a big red day, one of them days. And I was reading the mental game of trading at night, and they talked about how people who are like really ambitious and they strive for perfection, that's me in real life. They tend to like have discipline issues. It's harder to overcome their discipline issues in the market. And I was like, no wonder it took me so freaking long to get to a stable place of discipline in this game. And then like, you know, I still have certain days where I have lapses and I'm like, yo, why do I still do that sometimes? Like oh, no wonder. That's the perfectionist side of me. So you have to really like accept the fact that, you know, you're never gonna achieve perfection in this market. You'll never be perfect. It's never gonna happen. So yeah, you like maybe some other things in life you could come so close to perfection where you almost feel perfect. But this is the game right here where they will humble you, let you know, like you just ain't that. You know, so it's good because it keeps you hungry, but it's bad because it can cause you to revenge trade. It could cause you to over trade. It could cause you to, you know, it's really hard to take a loss sometimes because like, no, I'm wrong. Like what? Me? Like, how could I be wrong? Like me? Like, you know what I'm saying? Like that's how perfectionists be approaching this stuff. Well, It's like, nah, I can't end the day like that. I gotta get it right. Like when I used to play basketball, I couldn't lead a gym until I made a certain amount of shots in a row. Like it was a rule of mine. Like if I was practicing or whatever. But I can't do that on the chart. It's like, no, if I took a loss, like I gotta lead a chart. Ain't no, I gotta get 3 green trades in a row. Like, ain't none of that. You gotta get off. You feel me? So it's different. Like what Keisha said, progress over perfection. So with that being said, what you do as a perfectionist, if this can help any of my perfectionists in the room, is you need to find perfection in your effort. So how do you achieve perfection now is perfection of rule following, not green trades, not P&Ls, perfection of following your rules. Like, yo, I followed every rule this week. That's making you perfect. Whether that makes you green, red, small green, small red, whatever. But you're perfect because you followed your rules every day. That's what makes you perfect. So you need to, it's just a change of perspective and a change of the goal. I'm not trying to be a perfect trader as in being green. I want to be a perfect disciplined trader. That's what I'm striving for now. So like, hopefully that can help some people out in the room. But all right, let's get into ES. I don't think y'all feel me for real. Y'all not really understanding what I'm saying, man. Y'all don't be hearing me. I be talking to a few of y'all that's really locked in, but most of y'all just here for vibes, man. Y'all just here for the vibes. Y'all don't be hearing me for real. All right, so look, we ran these lows on ES. That's cool. I'm not expecting it to be a sweep, but there's definitely a chance. Kia heard me. We locked in Kia. Facts. There's definitely a chance the ES could pop back up based on this fair value gap. This fair value gap is not a fair value gap that I'm expecting price to make new weekly highs off of. No. This is not my expectation. That is not my expectation. Can it cause a reaction? Yes, it could cause a slight reaction. This could be a place where we retrace. So that's why I'm trying to keep our eyes open on potential retracements in the market, especially when price looks like this. So we got to be very, very careful, my people. Very careful, especially because price looks like this. When it's staggering into a PD rate, I'm always nervous. So, everything else about NASDAQ applied to ES. I think if we are able to lose, if we close under this green candle, I'm about to highlight it. If we close under this green candle on ES, I think ES is going to make its way down into these lows down here and lower for real. It's going to go lower in my opinion, but I'm just saying that candle is very important to us. So ES is on close watch just like NASDAQ is. All right. And YM, who remembers this arrow from last week? I don't move my arrows. Oh, YM, this is what I drew. It's only visible on the daily, but I was telling you guys how we have a valid bullish PD rate. Valid, unmitigated bullish fair value gap. We have a valid bearish PD rate. This 4-hour city. Okay. I said this is where consolidations tend to happen in the market, right? Consolidations tend to happen here. Who's going to win the battle? Well, the one that I think is going to win the battle is the 4-hour city. And I said that because I was bearish on NASDAQ and everybody. And look who won the battle, the 4-hour city. Took it all the way down. So the arrow ended up playing out. And I still think it's going to go lower personally. But I look at the weekly chart on the Dow Jones. I look at the weekly. I really believe that the Dow is going to move under these lows. Doesn't mean retracements can happen. So we already know this week we're watching real close for retracements this week. But I still believe that we're not done yet. Based on the weekly and based on the monthly, I don't think we're done yet on the Dow or anybody. I don't think we're done dropping yet. Oh, we got the September lows on the Russell. That's what's up. I know we were talking about the Russell getting the September lows. I didn't even see this earlier. We got to that target. So smooth. That's what's up. When did that happen? Monday. Oh, wow. Yeah, we got there last week. Good. I've been waiting for these September lows for a little minute. I mean, I would aim for these equal lows hit next for real. But be careful about these retracements. This is definitely a place where you could retrace. Honestly, I just want us to be careful this week. I don't want us to get caught off guard on any type of pop-up. I just don't think whatever retracement happens, I don't think it's going to last. I think it's just a retracement, not a reversal. So be careful trading them things. We almost done. CL, what was CL's plan? Since up here, we said CL was going to run these lows down at 65.27 since up here. Ran it. I mean, hit this place, came down and ran it. It played out just last week. This was the plan. This SIBI to them lows, it played out. Now that we met the objective, I do believe we're going to trade back to the downside, but I would wait to clear the yellow line again. So notice what we did. All we did was sweep it. Look how much we swept it, or how much we swept it. Look at that. Look at that. That was nice, real nice sweep. So anybody who played downside into that target, shout out you. I hope you took your profits. I don't think it's done dropping yet though. I think we're to come back under these lows. Maybe it's safer to take price alerts under here because I believe under here we're gonna end up running these lows down here at 62.40. All right, if we lose last week's lows, I think we can move to 62.40 here on CL. So we're gonna watch close. And gold, yo, this is where you gotta be careful about gold. I need you to be careful about gold because gold is in consolidation. I was telling my mentees this last week. Monday, what was he talking about this? I don't remember. Was this phase 2? Was this phase 1? I don't know. But I said, yo, gold, I don't want to touch gold in this area because look at the upside. Look at the upside. It's one of those stagnant moves, right? But the downside is also a stagnant move. Ah, man, when you see that, stay out. You're in low probability conditions. And if you don't believe me, just look at the past. Man, look at these candles. It's Doji Palooza. Don't do that. Don't do that to yourself. Don't do that to your account. There's no need to force trades in here. You're going to get clapped. So what I like to do in times like these is I want to see how we take the breakouts of the highs. I would set price alerts towards all-time high, and I would set price alerts towards these lows. That's it. Because, you know, if we come to these lows, we should, when we finally break consolidation and we go to the downside, we should aggressively move past here, and we'll probably fill in this gap. See that gap right there? You probably fill it in. We'll go, if we can move past the red. If we move towards these highs, we should be able to really blast through those highs. So, but the middle part, stay away. In my opinion, do your thing, but in the middle, I would say stay away because there's no direction from my higher time frame. If I don't have direction from my higher time frame, all the time frames below it are lower probability. Okay, if the daily is consolidating, you're throwing off all your trades on the hourly and the 15 and everybody. Yes, you can make some good trades. Yes. But it's hard to get bigger targets. It's hard to get bigger plays, home runs. It's hard to get smooth price action because the higher time frame is in consolidation. So that's when moves look like this. You be on the 1 minute and it look like this. Like even if it's going your way, you like, dang man, like this is a headache. Yeah, because you trading a ticker whose higher time frame is in consolidation right now. So I want y'all to like look at the 4 hour, bro. Is this not self-explanatory? This is the 4 hour time frame. Is this not self-explanatory? Stay out of this. Yeah, gold. We not touching gold right now. Protect yourself. Nikkei funny. Nikkei coming out of that area though. Whoever been with me since last summer, we talked about the Nikkei rejecting his SIBI, yo. It consolidated here for mad long. It's finally starting to make its way out of here. Finally, it's starting to play out. I've been freaking talking about this for months, yo. We're gonna see, man. We're gonna see what end up happening. But it's definitely ugly though. And then last but not least, QQ and SPY. So one thing I needed to see to confirm downside was price close under this BISI here. I know it's hard to see, and because class is ending, I'm not gonna lie, I don't really feel like explaining why this is a BISI. Hopefully y'all can see though the imbalance here. I'm highlighting the imbalance. This is the low of the imbalance. So that's where the imbalance closes. We put bodies under that low. I like that. That's confirming downside to me. On same thing with SPY. I erased it on SPY already, didn't I? Yeah, okay, on SPY it was right here. We put bodies under there. To me, that's a very bad sign. And that's why I do also believe that, once again, I think there's a lot more downside coming. Even if we retrace at first, I think there's more downside coming. So I gave you guys the retraceable areas on the futures chart. And that's incentive for you guys to please take my advice and chart on futures charts, even if you trade options. Yes, even when I trade options, I'm watching NQ, I'm watching ES, even when I trade options. How do you do that? I'm gonna explain that real quick and I'm gonna end class. I'm gonna explain that real quick. So look, let's say let's say like this. I go to NQ chart and I'm like, yo, I think price gonna come to these lows over here. Where were these lows? September 8th. I'm off of September 6th. Here what I'm gonna do. September 6th lows. I'm gonna go, what is this, NQ? I'm gonna go to QQQ. I'm looking for the lows from September 6th. Where you at? Over here. All right, boom. September 6th, boom, right here. Okay, so NQ September 6th lows is the same lows that's gonna be QQQ September 6th lows. I mean, that's at 448. Okay, so I have QQQ coming down to 448. So I'm gonna base my strike price on 448. I'm gonna be like, that means I should get a strike price maybe at like 460. So that way on the way to my target, I become in the money. On the way there, I become in the money, and I get that premium spike. You feel what I'm saying? But like, I know where to get at. It's like, is these low, is the same lows I'm looking at on NQ, same lows I'm looking at here. So you're gonna say, yo, bro, why don't I just stay on QQQ? Because the charts on the futures charts have more information. So did I not just break down an entire play for you to start class today? Y'all don't remember the play you broke down at the beginning of class? All the information I talked about? You see, look at the consolidation that I was referring to that helped me get into the trade early. So you see, when the whole world is still bullish at this time and everything, right? Because look at pre-market, running up, everybody bullish, man, we plotting on downside for mad long. But how do we confirm the downside we wanted to take? We're looking at fair value gaps that's happening at 6 a.m. These fair value gaps is occurring at 6 a.m. You don't see it in options. We be talking about stuff that's occurring back here on Sunday at 6:10 p.m. There is no options chart showing you Sunday prices. You feel what I'm saying? So, but it helps you take trades. So when the market opens up on this candle, and then this red candle happens, if I was trading QQQ, I would get into puts. Everybody else is looking at a huge gap. There's like a gap here on QQQ or something like that. They don't know how far into the gap we going. They're nervous trading the gap fill. They're like, is it gonna fill the gap? Is it gonna bounce? Because you're looking at a futures chart, you already know that price gonna trade through all of this. So you're gonna hold your QQQ puts for much more downside. So get off QQQ's chart. It's not enough information. And they move in tandem because it's still the NASDAQ. So if you didn't know that, QQQ and the NASDAQ on futures are the exact same thing. There is literally no difference. Every tick is the same thing. Okay. So my disclaimer is, not disclaimer, my warning is you have to pay for data on TradingView. Otherwise, your NASDAQ chart will have a lag. If you miss this detail and you lose money, don't be mad at me because you stopped listening to me. I'm telling you right now, you need to pay for the data. It costs like $10 a month. Pay for futures data so you get the updated data and then do what I said. If you don't pay, you have a 10-minute lag. You're gonna think price is dropping, man. We reversed 10 minutes ago. You still thinking we dropping on NASDAQ, all right? So don't ever get it messed up. SPY is ES, correct. SPY is ES. SPY is ES, QQQ is NQ. The Dow Jones is YM. All right. So with that being said, though, that's all I have for y'all. The mentorship is starting next month. Next month. We got about maybe 5 weeks till the mentorship starts. The early bird specials end in 6 days from now. So definitely tap in, DM me for all inquiries on the mentorship. Even payment plans. Even if you tried Klarna and Klarna's not working for you, you want to set up a payment plan with me, DM me, talk to me. And that link is in the description of this video. And subscribe to the channel, like the channel. And with that being said, everybody, that is all she wrote.